HT Smartcast.
You are listening to a Mint production brought to you by HT Smartcast.
Hi, I'm Abhinav Kaul and welcome to this edition of Mint Guru Portfolio. Today we have with us Jiten Parmar, the co-founder of Aurum Capital, a Sebi-registered research analyst firm. In this Guru Portfolio series, Parmar will talk about his financial journey, how he started Aurum Capital, and his transformation from a software engineer to an investor. Let's listen in.
Hi, welcome to Why Not Mint Money, a personal finance podcast where we help you understand basic money concepts and share strategies for you to build your wealth. So let's get started on your money journey.
Welcome to Guru Portfolio Series. Thank you for talking to us.
Yeah, thanks, Abhinav. It's a pleasure to be doing this interview with you.
So, can we begin? How did your financial journey began into the stock markets?
So, before I say this, I am a software engineer by qualification. So, I was in the US in the early 90s, and my financial journey began in the US. 1993 is when I first invested in a stock, and that stock was actually Microsoft. So basically, over the next few years, I invested in tech companies only. Though, the power of equity was kind of well known to me because my father has been an IPO investor since 1970, and I have seen, what kind of returns and wealth can be generated through equity. So that sensitization was there for me, though my father was just purely IPO investor.
If you can share some insights how or in which companies your father invested at that point of time.
So companies like HUL, Tisco, or it was called Tata Steel that time. So he's got shares of Trent and so on. So he's got a whole lot of companies, Grasim and so on. Just a few I remember. I have memories of that quite clearly in my head.
And what were the returns like in those days?
See, the IPOs were always at par. So a company like HUL also had to come at 10 rupees.
Right.
So the returns were humongous. I mean, for my father, whenever he needed to do a big expense, he invested only 500 rupees in HUL. And he's already taken out lakhs and lakhs of rupees from that investment and still has some of those HUL. Whenever he needed, whenever there was an event in his life where he needed some companies like HUL and others which he had in IPO, basically helped him do those expenses without taking anything out from his business.
So you invested in your first IPO in 1993?
No. It was buying from the market. Microsoft is the company that was my first stock. Obviously, small quantity. I was a software engineer in US. So from my savings in the salary, I started buying some tech stocks. I mean, obviously, I did not know financials that time. The only thing I knew was technology, but all these things, how to look at financial statement, all that, I was completely unaware. And it was more of, basically investing, looking at products and so on. So I did invest in the US markets for 10 years. My journey was fairly okay. I mean, not that great also, but real journey started after I came back to India. I came back to India in 1999. For a few years, I just kind of, basically decided, that I want to become an investor. So I did a lot of reading up and so on. And 2003 is when I actually serious investing I started.
Okay. And when you came back to India in 1999, you came back as a software engineer, as in were working as software engineer in India also then?
No, so I had a company in the US actually. I was co-founder of a company in US. We started that company in 1995. And just before the dot-com bust, we were able to sell it to a Nasdaq listed company. We got a great exit in life, and basically I became financially independent with that particular exit of the software company we had. And post that I returned to India. So that was the journey, my software journey. And then I wanted to do something different post that. So I also invested into a lot of real estate and started learning investing. and eventually, I found my passion was, of course, IT was there, but IT was too stressful. But I found my passion in equity investing.
So what was the name of the company that you founded?
Yeah, it was called Aquas Inc.
And were you the co-founder or the sole founder?
Yes. No, co-founder. We were 4 partners in that. Yeah.
And then you started investing in India. If you can take us through the journey.
Oh, yes. So again, another long journey. So after returning back to India, I started investing first into real estate because I had got a good payout and I wanted to, start with some monthly earning kind of, stuff. So I invested into real estate, which were yield generating. So it would be like ATMs and office spaces, which were leased out to different companies. So that's how I started investing in real estate. And simultaneously, I mean, that's obviously not a full-time job. So obviously, I wanted to invest in equity. So, opportunity, I had to basically, learn from the basics. So that's when I, started learning, because I am not qualified, I'm qualified to read financials. I am a software engineer. So I learned in the next 2-3 years, I think 2001 to 2003 is when I started learning and looking at balance sheets and P&L and, the nitty-gritties of, basically the financials. So I kind of had the passion, so I could learn. And 2003 is when I started seriously investing in the equity markets. Of course, my real estate journey was also going on parallelly. Eventually, we became developers, and we have done quite a few projects in the Pune area, and we still are doing some projects. Of course, we don't do, a lot of projects. We do one project at a time kind of stuff. So yes, that journey is still on. But again, in the sense that it is limited to just one project at a time.
And what is the venture name of the real estate project?
Yeah, Alpine Homes is our brand name.
Okay.
And so we have done in the PCMC area. I don't know if you are aware of that, Pune Chinchwad area. There we have done a few projects already.
Okay. So you said in 1999, after selling off your company, you were financially independent.
Yes.
What was your age at that point of time?
I was 30.
30. And what was the driving factor that you still wanted to invest in money and invest in stock markets, invest in real estate? What was the driving factor?
I mean, obviously, once you have certain thing, you would want to grow your money, right? And somehow, cycles have kind of worked for me. So I could get into the real estate cycle also at a good time. And so all these properties I talked to you about, the rental properties and all that, they were quite, when I invested, they were quite cheap and available at very good yields. And in the next few years, a lot of this property price is also multiplied and so on. So what attracted me, as I told you, equity always fascinated me because I'd seen what it had done to my father, who was a very small investor, but the kind of returns he made in those IPOs is something. So that attraction was always there, and life provided me the opportunity to go after my passion. Since I had sold the company, so I kind of had a sort of a clean slate. I could start something in IT or I do something else. I decided to do something else and followed my passion.
Would it be possible to share the financial details of the company that you sold?
No, so there's a 10K in the US. I don't know whether it is still there or not, but that was there. It is. This company was sold for about $10 million at that time.
So coming to 2003, that's when you said the serious investing started happening.
Sure.
So what was the strategy you firmed up to pick up the stocks, and what were the initial stocks in 2003 that you picked up?
So again, for me to talk about Indian stocks, individual names will be very difficult. But then some of the stocks I invested during that time, I still have those, stocks. For example, one company I invested in 2004, it's a chemical company. I invested at 8 rupees in that share, particular share, adjusted for the split. I mean, it was 40 rupees, 10 paid up. It is now 2 rupees paid up. So 8 rupees is my cost, and I'm still holding that stock since the last 18 years. It's become a great story for me. The current price is 3200, so humongous returns, and that is my largest position I have. So apart from that, one very large company which eventually, there was spin-offs and all that. That I'm holding from 2005. So quite a few stocks I'm holding from very long time. But then again, it is always based on periodical reviews where I will see the valuations. Of course, I do give leverage, in the sense that I will sell them only when I feel that they are super expensive, because the kind of returns they have given to me, you do want to keep them running. So essentially, a lot of long-term investing has happened, and over the period, I also started. Since cycles have been kind to me, I could get out of my company before the dot-com crash. I could get into real estate before the great real estate boom came in. So I started looking at cyclical investing also, which is nothing but value investing. So value investing is something which I kind of focused on right from the start. Uh, and so cyclical investing is a particular stream in value investing, which I kind of focused and basically learned and done doing mistakes, and which has worked for me over the years, and that is something which a lot of people associate me for cyclical investing.
Coming to Aurum Capital, what motivated you to start your own firm?
Yeah, so again, as I had told you, I kind of became financially independent at a very early age, and over the years, I've been able to grow my wealth enough. I mean, in a decent manner, and I was always, I kind of always had this. I used to share right from when I was in college, and when I was in the US and all. I kind of always believed in sharing what I learn, and so I used to write on Google groups during, I think this is 2005 onwards. I used to write a lot on there were Google groups talking about investing and so on. So I used to write in those forums. There were other forums like Value Picker. I used to write there. I used to write, share on Twitter and so on. So kind of, basically fairly good network I have developed, a lot of friends, well-wishers, followers over the years. The idea of starting of Aurum Capital actually came from friends and well-wishers that, they said that you must start something. They kind of have benefited from the advice and so on.
And which year was it founded?
2018. So another good thing is, I didn't want to do it all alone. So I also found a very good partner who kind of, shared the same, beliefs, and who is also an excellent, researcher in stocks. So it kind of, worked out well.
Great. And what is the current AUM that you manage?
Yeah, so again, we are operating under a research analyst license. Okay, so we directly do not manage funds. Okay, we provide research, and we have a fairly sizable clientele. Our clients do their own allocations.
Okay.
Of course, we do have plans to go for PMS or AIF license in the very near future.
Okay. So have you applied for it, or you're waiting?
No. We are planning to soon.
Okay. So by the end of this financial year?
Hopefully, yes.
Have any schemes or?
Yeah. So we have two products right now. So our website, which is aurumcapital.in, okay, that has one strategy which is there now for just little over more than 4 years. which is called the Value Investing Research Services. So basically, it's a 20 stock, strategy, where obviously allocation is to be decided by the subscriber, but a lot of our subscribers will give an equal weightage of 5% to each and then invest. So that is one strategy which is there for 4 years. Basically, purely value investing. Now, value investing, the themes we follow within that is basically grow stocks at reasonable value, or it could be cyclical stocks, or it could be special situations. So all these are basically part of that particular strategy, and so that is one strategy that is there on small case also since last more than 1 year. Apart from that, we have a product called cyclical bets small case, which is exclusively on small case. This product is there for last little more than 18 months now, and is one of the best performing products, and basically focuses on business cycle turnarounds. So this particular product has almost given 100% return in the last 18 months. So these are the two products we have.
If you can throw some light on cyclical themes right now that you think are going to work for the next 5 to 10 years, what would be your picks?
So again, I always say that for cyclicals, one should not have a very long view. 5 to 10 years, obviously, you might stay in a cycle for 5 years. It depends, but you need to be nimble enough to get out when you think things are changing, or when basically there is irrational exuberance in a particular cycle and so on. So I can talk about specific examples. Let's say you look at steel companies. The cycle was down for quite a few years. I think 2016 is when it changed, and then it again went in downturn. Then 2020 post COVID, it went again. What happened with the steel cycle, and after peaking out again, it has corrected, and so on. So this is what happens. This thing, there will be periods where for 10 years, you will find zero return from point to point. For example, the Tata Steel, 200 rupees to 200 rupees in 10 years, you will find those kind of periods. So if you are unlucky and you enter at that point and wait for 10 years, you make zero return. So the key is to basically play these cycles. So there is a timing element to it, and that's what we try to do. Is when during this 200 to 200 journey, it would have gone to 200 to 1000 and back to 200 kind of. So you would want to capture that that particular period where it has taken this journey from 200 to 1000. So you did not get at 200, but let's say something like you can get in at 300 and get out of at 800 over a period of 2 years. The outcome is very different than what could be for long-term holding. I'm just trying to give an example here.
Right.
So apart from that, there will be some sectors where one can really actually have a long-term view. For example, telecom is one sector where we kind of expected a turnaround, and in 2020 we went long on a telecom stock. Now that particular stock we are still holding, and we believe that is something which it is highly possible that we might hold for 5-10 years. So there could be some stories, because there is barriers to entry and so on. There are just 2.5 players left in the telecom cycle for somebody new to come in. Market size is expanding and so on. So there you can take a longer view, but again, it depends on cycle to cycle.
Right. Any theme, any cyclical theme that you think are not going to work from here on?
So again, I think for the last 3 quarters or so, we have been negative on IT. That is working out well. Obviously we don't short, but then we have zero allocation to IT for the last almost a year now.
So Jiten, coming to your personal portfolio, how are you invested now?
So I'm majorly into equity. 85 to 90% of my net worth would be in equity. That is quite low for me. Gold only for consumption less than 1%, I would say.
But that would be personal consumption, right? Gold,
Yes, yes,
not
yes, yes.
investment. So
No, no,
investment is zero technically.
zero. Investment is zero. Yes.
Okay.
Real estate, I would have around 7 to 10%. Over the years, I have also I talked about having these assets which were giving the rental yields and all that. Over a period, what has happened is that the yield has come down because the prices had gone up. So I have basically sold those real estate and moved a lot of it into equity. So that's why my real estate has also come down, and it has worked for me because I think the equity portion has given me far higher return than what real estate would have given.
So real estate technically is mostly commercial.
Yeah, commercial, some land, some flats. Yeah.
And alternative asset class?
No, I don't invest in alternative asset class. Zero.
Okay.
I understand. I see. The thing is for me, so I can just come in on this. For me to, for example, see, I'm a software engineer, so I do understand blockchain. I understand how cryptocurrency works and so on, for example. But the thing is for me to buy anything, I need to be able to value it. Now, these particular things I am not able to value, so I kind of stay away from it. For me, the reason why I'm not invested is very simple, that I can't value this, so I will not invest.
So in terms of performance, and here we talk about over the years, let's say 2003 you started in India. So how has your portfolio performed, and how has your equity portfolio performed in CAGR terms over the years, in a ballpark terms?
I think my equity portion would have generated at least 20% plus CAGR for sure. Though I don't calculate to the T, but it is definitely upwards of 20% CAGR over the last, let's say, 20 years.
Okay, and real estate?
Real estate, I think max 10 to 15% CAGR.
Okay, and debt, if you have an idea there?
That I don't have. Though I have 5 years sustenance money in debt, so that I will always keep. So it might sound cliche, but if stock market were to close for 5 years and I would still not get any dividend from my companies and all, I still can survive for 5 years. That's
okay. So you're saying you have an emergency fund for 5 years, right?
5 years. Yes.
Okay, and that is in your debt. And in which form of debt, as in any particular instruments?
It is in FD. Some of it is in arbitrage funds. Some in arbitrage funds I consider debt only. Some in FDs and some directly into savings bank accounts. I used to invest in that funds also and all that, but over the last few years I've seen that the returns are very low and there is a risk, so there is no point in taking that risk with that funds. Though I think with the current increasing rates and all that, I might shift some of these funds to debt funds. So I do understand that also, but just because there was a lot of upheaval and the returns have come down drastically, so I kind of didn't want to invest in them. For example, this funds are giving only 4% or something, 4.5%, and post taxation it is not worth to invest in those debt funds. Arbitrage, which is will give you similar returns but at better taxation, so that is a better option. Whereas there are a lot of banks which will give you 6% kind of interest rate on the deposit also, so that actually works out better than investing in a debt fund in the last few years. But if that changes, I am willing to move to debt funds.
So given the market conditions, do you plan to shift between market segments, as in reduce equity, increase equity, or same in the case of debt?
So I have a very interesting take on it. I will not shift out of equity. See, I'll tell you. So for me, as I said, I still have 5 years. That is more of an emergency fund. For me, dividends are far more. The dividends I get every year are far more than what I can spend. So for me, that particular sustenance care and all that is taken care of by dividends itself. So in that sense, I don't want to basically take cash calls and so on with my equity. What I do is I will shift some of my portfolios to debt like instruments in equity, in the sense that there are a lot of companies which will give me 5% or 6% plus kind of sustainable yield, uh, uh, and where I understand the business enough that I think that this will be sustainable. So it is in that sense giving me yield which is similar to what that would give or slightly better than that, with the with the power of equity behind it. So classic example is I last year and a half, there is one company which I invested, which was available at a 5% kind of yield, huge underperformance over the years, uh, and this company now has given this 5% dividend yield has actually come down because the price has gone up by 60-70%. So it works out well. Also, you can get the equity kicker also. So there are quite a few companies which will give you 5% plus kind of. So I position my portfolio accordingly within equity when I feel risk is high, and I will move to some of these kind of investing, at least 15-20% of my portfolio to this. So that is my way of basically managing cash within equity.
Okay. And how are you placed in terms of market capitalizations in your equity portfolio? Let's say how much is large cap, mid cap, and small cap?
So I would say, I think 70% would definitely be small and mid cap. 70 or maybe 75%, and then the rest would be large caps. Yeah.
And how much equity is in international stocks? I mean, you said you have stopped investing, or
yes, zero.
Oh, right now it's zero.
Yes.
Okay, so you those Microsoft shares that you bought.
Yeah, that I sold obviously.
Sorry,
yeah. I had sold.
Okay.
That time itself, during those 10 years, somewhere down the line, I had sold. Obviously, I didn't make too much money on that investment, to be honest. But then I don't have any regrets there, because for many years Microsoft did nothing, and I think in the last few years is when it has given these fantastic returns. To hold for so many years without any returns is also difficult. It is all good to say in hindsight, but it is not easy. This particular chemical company I talked about, also the one good thing why I was able to hold on is because it was constantly growing. So that is the reason you hold on to stock. For I think for the first 10 years the returns were very nominal. Re-rating happened in I think post 2014 or something, when a complete re-rating happened, and I got majority of my returns post that. But for 10 years it gave me very average returns. But the good thing was that the company was growing, so I kind of stayed with it. So that is how it works. It's very difficult to your returns are never linear in equity.
So over the years, what would you say one strategy that worked for your portfolio and one strategy that did not?
I have seen that staying within my circle of competence, doing value investing, doing cyclical investing has worked on an aggregate level. Of course, in cyclicals, maybe if I play 10 cycles, maybe 1 or 2 cycles might not work. But over the years, I've seen that at least 8 cycles out of 10 which I play have worked for me. Of course, the returns could be at variance to what you would have expected. Sometimes it is far higher than what you expected, sometimes it is lower than what you expected, but going wrong is not at the most 2 out of 10. So that has been my experience over the years. So value investing has really worked for me. Within that, where I've had failures, or rather mistakes, is whenever I have gone down the quality curve in or invested in companies with questionable management or bad management. Of course, this used to happen in the earlier years far more. Over the years, develop processes and all that. And with starting of Aurum Capital, our processes strengthened so much that fortunately we have in the last 4 or 5 years we've not had any such kind of mistake. Of course, uh, you know. Mistakes where if you, let's say, you overpaid or something went wrong with the company, that can happen. But as far as error of commission due to bad management, that is something which we have completely stopped. So these are the basically things which have worked, and some of the things which did not work in the past, which we have tried to correct.
Any particular sector that you bet on and that didn't work out?
Yes, I will give example of textiles. I think 2016 or 16 or something is when I invested. It was in downturn, and 16 or 15, to be honest. I don't remember the exact year, but somewhere around there. And it did not work out for 4 years. Consequently, it worked, but it took a very, very long time. 4 years is a very long time. We do not want to invest in cycles where we have to wait for 4 years. So that was, I consider myself that is a failure. Though with my investing, what I do is I will only put my foot in the door whenever I'm playing a cycle, especially a contra cycle where you are buying at peak pessimism. So I will just put my foot in the door. So for example, I will take a 1% position, let's say in a stock, and when I see a turnaround, because what happens is once you put the foot in the door, you get acquainted to the surroundings. So in that, in stock parlance, you start following the parameters which are measurable far more rigorously once you are invested. So you look at demand supply far more rigorously. You look at what is happening in the sector far more closely, and then you can sense when you can sense that then now yes, situation is turning around, and that is when I will take it to, let's say I want to take it to 5% or 6%. That is when I will take it to. So this is something which we have kind of evolved over the years, and in the cyclical bets small case, there what we do is we don't invest in during peak pessimism. We invest whenever the turnaround is visible. So we are trying to cut down that time of waiting for that. Yes, for that we might have to pay a bit higher, because what price you, let's say you were to buy a stock at peak pessimism at 100, and let's say you generally, if cycle plays out, you will at least make it will go to 300 or 250. You in the cyclical bets small case, and for that, let's say the period is, let's say, 3 years. In cyclical bets small case, this journey will be from, let's say, 130 or 140 to 250 or 300, but the period will be year and a half or something like that. So that's what we have tried to evolve in that particular strategy. So we will enter when the turnaround is visible or is on the cusp of turnaround.
So now coming to some personal finance details, how do you identify yourself as an investor?
So I'm a value investor. So you can say hardcore value investor, to be honest. So I will let stocks, good stories also go. Have an error of omission. I don't mind having an error of omission. What I need to be satisfied is valuations. I should have margin of safety, and risk reward should be in favor. These are the two things which I look at whenever I make an investment. If I don't have a risk reward ratio of minimum 1:3, I will very rarely invest in that particular story, and where I have margin of safety. So it should not be that I lose 50% of the capital or make 150%. That is still risk reward of 1:3, but that 50% erosion of capital is quite high too. So I would look at for me 20% risk of capital and 80% return. is better than 50% risk of capital and 150% chance of return.
And what does wealth mean to you?
So wealth means that you should be able to follow your passion. So the two things I like to do or love to do is traveling and equity investing. Not in that order, I mean the other order, but yes. So I'm fairly widely traveled. I mean I've stayed abroad and I travel at least 4 to 5 times a year. So of course all this has been disrupted in the last couple of years due to COVID. I did go to UK last year, but so I like to travel and I like to invest and share my knowledge. So I'm able to for me wealth is something which lets me do all this and lets me sleep well at night. That is what is important, and that's what wealth is.
That's it from my side, Jiten.
Thank you.
It was pleasure talking to you.
That's it for today. If you have any questions, you can write to us at mintmoney@livemint.com. If you want me to cover any specific topic, DM me at @Abhinav Kaul at Twitter. To stay updated on this podcast, follow HT Smartcast on Facebook, Instagram, Twitter, YouTube and LinkedIn. To listen to more such podcasts, log on to htsmartcast.com और सुनो नए नजरिए से.
This was a Mint production brought to you by HT Smartcast.
HT Smartcast.